Hello traders. Welcome to today's Pairs of the Day update. Let's dive into the latest movements and key factors influencing the euro, US dollar, USD, and gold, XAU. In Monday's early Asian session, euro to US dollar trades with a bearish bias near the 1.0885 level, attracting sellers amid growing risk aversion. The pair edges lower, influenced by the strengthening US dollar. Monday's economic releases will be critical in shaping market sentiment. Investors are eyeing the Eurozone's May industrial production data and the July New York Empire State Manufacturing Index. Additionally, the Federal Reserve's Mary Daly is scheduled to speak, potentially impacting market dynamics further. On the euro front, officials anticipate that pricing pressures will remain close to current levels for the entire year, lowering expectations for further rate cuts by the European Central Bank, ECB. ECB President Christine Lagarde emphasized a cautious approach, citing the uncertain growth outlook despite a strong labor market. The U.S. Producer Price Index, PPI, inflation rose faster than expected in June, with the headline PPI climbing to 2.6% year-on-year and the core PPI reaching 3% year-on-year. This unexpected increase has bolstered the U.S. dollar, as markets reassess the Federal Reserve's potential actions. In July, the University of Michigan's Consumer Sentiment Index dropped to 66.0, marking its lowest level in 7 months and falling short of expectations. This decline adds to the complex economic backdrop the Federal Reserve must navigate, potentially influencing future rate decisions. The weekend saw political violence in the U.S., including an assassination attempt on former President Donald Trump. This incident has heightened demand for the U.S. dollar, as investors seek safe haven assets amidst the turmoil. Gold surged after the U.S. Consumer Price Index, CPI, data for June showed a slowdown in inflation, increasing bets that the Federal Reserve will cut interest rates sooner than previously thought. This inflation slowdown has made gold more attractive as an investment. Markets are now fully pricing in a 0.25% cut in the Fed funds rate for September and over 0.6% in cuts by the end of the year. This expectation reduces the opportunity cost of holding non-interest-bearing investments like gold, thereby enhancing its appeal to investors. Now, let's see what the technical analysis reveals. Let's take a look at the chart. Okay, we have opened the 4-hour chart of euro to US dollar. The price is currently above the 20-period moving average following a sharp decline in the US dollar attributed to last week's US CPI data. The stochastic indicator shows signs of falling but remains slightly inside the overbought area, suggesting a possible minor decline. For support and resistance, we've identified 1.0869 and 1.0846 as support levels, with resistance levels at 1.0910 and 1.0936. If the price continues lower, it may find support near 1.0869 or potentially towards 1.0846, with profit potential ranging from 65 to 155 pips. On the upside, any corrective upward movement might face resistance around 1.0910, aiming higher towards 1.0936. Now, let's switch to the 4-hour chart of gold, XAU/USD. The price is currently moving above the 20-period moving average, with the stochastic indicator slightly lower near the overbought area, suggesting a potential decline. We've identified 2,391.68 and 2,369.86 as support levels, and 2,427.29 and 2,450.00 as resistance levels. If the price continues lower, it could find support near 2,391.68 and 2,369.86 with profit potential of $18 to $39 per troy ounce. Conversely, if the price decides to move higher, it could find resistance levels at 2,427.29 or even test higher towards 2,450.00. Always remember to consider your risk management before entering any positions. Alright, that wraps it up for today. See you in the next video.